Good morning, this is Jack from Charting the Markets, and this is the pre-market webinar for the morning of Friday, the 28th of March. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, just a quick announcement at the beginning. We're sending out some emails over the weekend, and I'm probably going to switch over to subscription on the videos and so on. But I'll be sending you stuff about the weekend. What I wanted to talk about was the stats for next week. Now, April, actually, traditionally, I don't know whether it's going to apply this time, but April's traditionally one of the most bullish months of the year. Now, we don't have, we've got neutral stats today. We've got bearish stats on Monday, as we often do on the last day of the month. The first and second day of the month, we've got bullish stats, very bullish stats on Wednesday, actually. But April's the best month for the Dow, average 1.8% since 1950. And looking through April, we've got a strongly bullish leading day on Friday the 4th, Tuesday the 8th, Thursday the 10th. Monday the 14th, Tuesday the 15th, Wednesday the 16th, Tuesday the 22nd, Wednesday the 23rd, and Tuesday the 29th. And the first bearish leading day in April is actually on Wednesday the 30th. So we've got a very bullish leaning month. Against that, we've got obviously what's actually happening on the ground, which is that we've got a lot of bad news. We've got a trade war which is likely to be starting, and we've got what may be a fairly large economic shock coming. Now, I'm going to be talking about this in a post. I'm going to do two posts today. One talking about what I'm expecting to do when tariff starts, and the second one's going to be talking about where markets might go. Now, this might be I think this very well likely will be a shock akin to COVID, except for the fact that COVID wasn't something that could be switched off by someone changing their mind. This will be, but as economies move into recession and as positions get entrenched, it's going to be less and less easy to just turn it off and go back to normal. And I think possibly in terms of recession, we've probably passed that point already, if we hadn't already been going into recession even before Trump got inaugurated, which, having looked at the numbers, is very possible. We will see, but certainly it's going to be a really interesting year, and the next April is going to be pretty interesting. Could we see an April which goes down against usual expectations? Very much so, and we will see. And actually, starting, not quite in April yet, but starting today. Today, you can see on ES, we're coming back and we are retesting the low. Now, we've got a weak 60-minute buy signal fixed. They're not going to turn into full buy signals because we went too high on the RSI. But this is what I was talking about yesterday morning. I was talking about the possibility that we might come back and retest these lows and make the retests of the lows that we hadn't seen. I think I was talking about it yesterday morning. I was certainly talking to somebody about it yesterday. And we had a nice looking double bottom on ES, and we didn't have one on SPX or the others, and we are getting those this morning. We've got a point of decision here. If we lose the weekly pivot area, 57.13, I know it's not relevant really because this is obviously the weekly pivot is only the weekly pivot for today, but this is an important support level. More importantly, this level here, really 57.20 area, if we lose that with any conviction, then we may just go down directly, and that means that we leave the path that I drew out a couple of days ago. I really like that path, and we've got a lovely looking double bottom here to get us back to that retest of the high. It's a really lovely technical setup, and it's the obvious way to go, but I have to say we've had a lot of bad news. The auto tariffs look like a complete disaster, and we're being promised an awful lot of tariffs and basically a full-scale trade war next week. And economically, that is not going to go well. It really isn't, and the market knows it. It may be that gravity is just going to pull us through the support today, in which case we should be on the way back to the retest of this low, which is where these flags were always likely to end. We will see how it goes. NQ retest of the low got significantly lower, actually. We're getting pretty close to the flag support. The flag support on ES has now broken down. RTY had already broken down, but we're got a potential level bottom here too. On YM, Nice looking double bottom. These could all take us back and they could give us the retest that I was expecting to see. But as I said, I mean, the news is not great. And at the moment, it seems like Trump is going to hang tough on this. And if that's the case, then the market's going down. And we're not necessarily just going into recession. We could be starting a fairly deep recession. Now, I'm going to be talking about some of the other things that might happen with a trade war in my post today. But I'm going to be talking about as we rebalance into a multipolar world, which I think the world is reluctantly doing this year, then that raises questions like, for instance, I'm going to be talking about inflation. Inflation is quite an important one. Now, tariffs will raise inflation. Recession will lower inflation. But there is another factor here too. Lowering inflation won't necessarily lower interest rates. And I did a bigger picture post about 3 months ago when I was talking about this. And what I was saying was, the Fed shouldn't lower interest rates so far that it became obvious they don't control interest rates, because they don't control interest rates. The bond market controls interest rates. Basically, the main interest rate is the yield on the 10-year bond. And that's what I track. That is the TNX thing I track. And that is where it's really important. How could that be affected by what's happening here? Well, if we're going into a full trade war here, then I think, well, the US dollar is the world's reserve currency. That may start to change, and it may be that countries who are pissed off with the US because they're in a trade war and they're angry with them, actually start moving away from holding their treasuries. Now, one of the things that you get if you're a reserve currency is that an awful lot of countries are holding your bonds because they're holding that as cash because it's the reserve currency. If people stop doing that, then of course that puts a flood of bonds on the market, and that lowers bond prices, and that raises interest rates. So it may well be that even if inflation is going down because of the recession, that interest rates are going up because people in the outside world are dumping their bonds. I'll be showing a chart on that on the post today. But I'll have two posts out today, or latest one of them might be out tomorrow, but they're going to be basically talking about the effects that I'm thinking may well be affecting the economy this year, and also and talking about where, if this gets ugly, where we may be going on equities, and that is well worth watching out for. So watch out for those later today. Okay, on DAX and the SDX, we've got a possible weak buy signal brewing on DAX. Nice looking bottom here too. I really like this rally. As a potential. It's nice. ESTX, nice looking double bottom here too. Weak 6-minute buy signal fixed. I like support here. Double bottoms taking us up into the retest of the high as I drew on the charts I drew. But it's not necessarily going to happen, but it's still looking pretty damn nice as we sit here now. All right, looking at the bigger picture charts on SPX, I'm expecting to see a retest of this low. And a break of this flag. Now, the break of the flag is just signaling that we're going to go down later. But obviously, if we lose the support level hard, then the IHS starts deteriorating in quality because pretty much we've reached the ideal lows for those already. And we get and the chances increase that we're going to head straight down to the retest of this low here at 55.0465. It also threatens the daily middle bands. Now, yesterday, we had, yesterday we had a close at 56.93. Now that was actually below the daily middle band at 57.06. So yesterday we saw the first significant close. Now, was it a visual close below? Barely. But actually that's 13 handles. That's no longer a close on it. Let's have a look at the others. On the Qs, we closed at 481.62. That is, again, significantly below the daily middle band. Although, really, again, it doesn't really look like it. But it is, nonetheless. Nonetheless, that is something I would count as a close below. So we saw a break below the daily middle band on SPX. We saw it on the Qs. On Dia, we just about held it. And on IWM, we've got a marginal break below, but of a level which I would see as a close on the band. So we're not seeing any conviction breaks to the daily middle band yet, but if we go much lower today, we're going to see those today. And at that stage, then we've got clear targets back at a retest of the March lows and very possible continuation lower from there. Looking at, hang on, wait a second. Looking at the Qs, looking for a retest of this low here, and we've got a nice looking double bottom, and that could well get us back to that move, because I think there has been a general sense of disbelief about the tariffs coming on April the 2nd. Now, I've been thinking I've been watching Trump carefully and thinking, actually, I think he means it. I could be mistaken. And if I am mistaken, then we can get good news. And actually, these IHS patterns which I drew could play out. But I think he's probably going to proceed with them. It may be that he dithers, that the market goes down, then he starts talking about delaying things, and then he puts it back on again, and then it goes down further. And I think we might see a lot of that to and froing. This isn't COVID, and that COVID was basically a pandemic, and nothing the politicians said was really going to make an awful lot of difference. It was going to just be there until it played out. This is entirely based on political decisions, at least at the start. By the time we start going into recession and the economics start getting uglier, at that stage, it's going to be much more about just playing out the current move, and much less about what politicians are doing. Although, obviously, good news is still generally good news, but you do find that as the trend really gets going, the good news and bad news tend to become less important. Looking at Dyer, liking the whole of the daily middle band so far. We haven't broken down below the flag support at the moment. We may well get a test of it if we're retesting this low, and I'm wondering whether we may see that this morning. But really, at the moment, we're still looking pretty good for the scenario I draw on Wednesday. We will see whether that delivers today. But if we see another 20 handle decline on the ES below yesterday's lows, then I'm thinking that we may well have just lost it and be heading directly down to the lows again and the retest. But I would say that if we do that, of course, retesting the lows isn't necessarily bearish. What we've got another inflection point there with the potential larger double bottom. Would be an obvious place to see a bounce, but again, we could see a hard break below that, then opens the targets below, and all of the open pattern targets we've got. Just to remind you what those are, on SPX, we've still got targets down in the 53.60 to 54.40 area. On the Qs, we've still got targets down in we got pretty close to those, but those targets are in basically the 456 to 459 area. We got as low as 465. On Dyer, slightly more skeptical about these targets because they're a lot lower, but we've got an open double top target, and it's a beautiful double top. It really is. We've got an open double top target, which is down to about the 384 area. On IWM, a moment. On IWM, we've got a head and shoulder target, which is down here in the 182.5 area. Again, that's quite a way away, and we will see. But in terms of what could happen if the tariffs go on, that looks entirely doable. In fact, I think it would just be a stepping stone, probably on the way back to the retest of this low here at 158.85. Okay, let's have a look at DAX. Very decent looking double top here. Lost the daily middle band hard yesterday. Of course, one reason for that is with the car tariffs, that's going to particularly affect Germany. Germany exports a lot of cars to America, and this is going to hit BMW. It's going to hit Mercedes. It's going to hit Volkswagen. So I think European car imports to the US are something like a couple $100 million a year, and mostly those are from Germany. So that's why DAX is reacting badly on this. But I was saying I thought the Europeans would start catching up on this next move. I think this is the start of that in DAX. On Nikkei, still holding the daily middle band and testing it, but chances are that's going to go down too. And of course, an awful lot of the cars that are going to be affected are Japanese. And it doesn't just affect the cars which are being imported, made in Germany or made in Japan, and imported to the US. It also applies to their factories in the US, because what he's done is he's taxed US car parks. Now, I have to say, from a practical point of view, there is talk that is going to be nightmarish to administer and work out what proportion is of US-made parts. But a high proportion of the cars that are assembled in the US by foreign companies are actually imported from their home countries, and all that's going to be tariffed as well. Interestingly, I understand, I've seen that Trump has had a talk with the US car makers and told them that he doesn't want them to raise their prices due to tariffs. I wonder if that's even possible. But I don't think it's practical, because I think his idea is that they can quickly bring in all of their manufacturing from Canada and so on and so forth, their supply chains that have been built up over years. But the problem is it's going to take years to do that. So it's not going to be immediate. So I think prices for cars all across America are going to be rising next week, possibly with the exception of Teslas. All right, great. Let's have a look at the dollar. Dollar, we have been trying to break up from this double bottom for days. It's not really making a lot of progress, and I'm wondering whether this is just a flag forming, setting up a retest of the lows. So I'm still quite liking the flag, but I liked it more when we had a daily RSI 5 buy signal, and that has now made target without it actually moving much. ZB, nice flag. I think this is going to break up and retest this high. And obviously that's going to cut interest rates here, but I'm thinking that maybe the second high will top and then take it down. But what I'm going to be watching with particular, one thing I'm going to be watching with particular interest this year as things get rough, is what happens to bond yields. As I said, inflation will tend to go up because of tariffs. It'll tend to go down because of economic growth. And if people start selling a lot of their treasuries and start moving into other currencies, and the US starts losing its reserve currency status for the dollar, then that's going to have a powerful upward push for bonds, for bond yields, and that actually could put up interest rates significantly, and that would be very bad for ZB. All right, CL. CL, we're still struggling at the monthly pivot. If we can get over that, I'm still quite liking this target up here at about the 70.7 area, and we may well reach it. NG, lovely flag. It's really, really, really nice. We came down to the ideal trend line here. This is very nice, and it's breaking up. Could this turn into a larger flag? Yes, potentially. Could this be a head and shoulders forming? Yes, potentially. But I think this is probably a flag which is going to break up to a retest of this high here in the 4.95 area. After that, as I've mentioned, we've got targets up in the 5.75 to 6 area. But if we are going to head into recession in the next couple of months, then that could weaken gas demand. And it may be that this double bottom will fail. But until we do that, I'm still quite liking it. And on natural gas, that is a target that could be reached in a couple of months. So I'm thinking we might do that. GC, we have retested the high, and we've got a possible 60-minute sell signal brewing. I'm wondering about some reversal. SI, that's gone higher. We've got a potential level top, and we've got a 60-minute sell signal fixed. HG, I think may well be topping out here. Could be forming a head and shoulders, could need a retest of this high. But I have to say, with what's happening in economies, I think we're going to be seeing a reduction in the amount of cars sold. I think we're going to see a reduction in the amount of cars made. I think we're going to see a reduction in economic activity, and that is going to affect the price of copper. Dr. Copper is likely to go down with the economy. So I'm looking for this to top out in all probability. USD. UUSD, I better wrap up actually. Sorry, it's a long talk at the beginning. UUSD, nice looking double top, trying to break down. KC, we've got thinking about this ABC, wondering about 355. SB, looks like a bull flag forming. CC, nice looking double bottom, likely going to break up, I think, although we've seen very little activity lately. CW, I was talking about a retest of the low, we've seen it. Corn was talking about a retest of the low, we've almost seen it. And soy seems to have been wandered off in the opposite direction, because I'm kind of expecting a retest of the low here too, but at the moment that's not cooperating. Corn needs to go a little lower, I think. Soy, I would quite like to see retest this low, so I'm leaning short on both of those. CT, we've got a move back over the monthly pivot. Not sure what's happening here, to be honest. I don't really have any patterns. I don't really have any divergence. I am thinking on the bigger picture, retest this low might be a good thing, but I'm not really that happy with the chart at the moment. I'll be having more of a look at it on the longer term. Lumber. On this chart, we haven't retested the high, and I'm leaning towards seeing it. On my other lumber chart, I'm not quite sure why the difference, but I had to switch around a lot of the charts as stock charts to stop covering some of the futures. And for some reason, this high retest has already been done on the other one. Live cattle is heading back into the high retest as expected. Lean hogs, I'm still wondering about a retest this low, although we've not been seeing any progress lately. Let's have a quick look at questions. My pleasure as always, guys. Anyway, I will catch you on Monday. And Monday is a bearish leaning day, and we'll see what happens today. But if we go down another 20 handles, let's say we go below 56.90, I think we're heading directly to the lows. And it's until then, this is a pretty nice looking setup, and certainly while we're holding 5700, this is a pretty nice looking setup to continue playing out the scenario I did on Wednesday, and I'm thinking that might well happen. But if it goes down hard today, and it might, the news has been awful. So if it goes down on that, then gravity is going to start just pulling it towards the retest of the low at 55.50, and we'll see how that goes. All right, great. I'll catch you tomorrow.